This is a video that is a courtesy of UncleDeriv's Productions, known as UD Productions, and I'll be sharing some insights that I found very useful. This is just the overall video. Most of the things like entries and systems, it will be done for those in the lifetime group. So these are my insights. They are just things that I found myself using. And yes, of course, this is not any financial advice or any kind of that, but this is my own views, me, myself, and I, my own views on trading these markets, because I've been trading Boom&Crash from the earliest of 2019 to now. So I've managed to see some benefits from this system for a long time. So this is just me and my views. No hard feelings for anyone or any other systems that you'll be using, but I'll be explaining on the surface of what I do. So a little bit of background. As for me, professionally, I am a business analyst. So it is quite a good link with market analysis because it's just more of it interlinks with each other. So I'm a business analyst. That's why most of the time I'll be telling you guys I will be tied up because I'm a business analyst. In market analytics, it has been really good for me because I've had some great exposure to the markets. And from my own experience, I think business analysis is more harder or much harder than market analysis. Market analysis attached to standard redo. Otherwise, business analysis is where I'm strongly at. Market analysis, like Boom&Crash, indices, and currencies. This is just small stuff. So there's one thing that I'm most concerned with you. That's the issue with money management, because many people have been asking me my trading plan, but I think most of you are being confused with the lot sizing, because as an analyst there are things that I managed to get out from these lots, and these are statistically proven. You can check them for yourselves. Let's say you are risking about 0.2, let's say 20 cents. 20 cents, this is the lot size from here, from crash 300 to crash 1000, from my own analysis. And I think this analysis about a week, old, because Deriv, it tends to change a little bit in the market volatility of these 6 indices, because I'm mostly comfortable trading Boom&Crash than volatility. So if you are losing 0.2 or gaining 0.2 profit per minute, this is the lot size. For crash 300, you can see that 0.01, that's the lot size you'll be putting, and 0.02 is the loss or profit that you'll be getting per minute. Let's say on that one candle, 1 minute, if you put 0.01 lot, this will be the loss per minute. So if it's, let's see, if it's usually our stop loss is 30 candles. So we'll be saying here 0.02 times 30 candles, which is $6. And the maximum risk exposure that I would advise, as for my view, that I really use, the maximum that I risk per minute, not per minute, I mean per trade is 0.2 when I have an account that is $120. I will explain it later. So let's say 0.2 times 30, that's $6, and $6, that's 5% maximum risk. On an account that's 120, that's my small. When I say I've got a small account will be 120. So let's try to do the maths to calculate the money management. We will say 100, this is 100% your whole capital, and we'll divide it by 5 because we are using 5%, that's the maximum risk, and you'll get 20, which means you need 20 entries to blow the account. That's 20 entries that will be reaching the stop loss 30. So that's here 20 times 6 to calculate the amount that you need to have for you to use this risk management. Because for Crash 300 you'll be using 0.1. That's how I trade, and I think by now you guys now know how to reduce the lot size, like to put here 0.01 for C3, then for B3 it's 0.06, Boom 1000 0.18, Crash 500 0.25, and then these two they move the same. If you put 0.3 on Crash 1000 and 0.3 on Boom 300, you get the same volatility when it's scalping or spikes. You can check it. Let's say for this, at the same time you'll be selling Boom 300 on a demo, and you sell Crash 1000 again on a demo, and you see that they will move equivalently to each other. That's what I have noticed on these two. In these two, Boom 1000 and Crash 500, they move quite, they're like, what can I say, they're of like the same volatility, but these two, Boom 500 and Crash 1000, they move the same. So here I was saying, you say $20, you say $6 times 20 to calculate your risk. Let's say 20 multiplied by 6 times 6, and you get 120. So here is equal to 120 for me to use this management, to use all these lot sizes, because 0.3 for Boom 300, it moves as 0.2 loss per minute. This is the risk management that I do on $120 account. So let's say now when I have 240 here in as my equity, as my balance, that means I will be doing everything here. All these lot sizes, I'll be multiplying them by 2. So now here on C3 it will be 0.02 now, on B3 0.12, on Crash 1000 it will be 0.6. So the more it grows, the more that I will have to adjust or double. So let's say if I double the equity, then I also double the lot size. If it's now 240, here it will now be 0.02. I think you get what I want to say here. So it's not just about putting the lot size, the biggest lot size, which means, as you can see, this is the range of the volatility. Let's say the hierarchy of the the volatility. Let's say for Crash 300, this is the most volatile, Crash 300 and Boom 300. Then on the second one, we've got Boom 1000 and Crash 500. And then lastly, these are the less volatile, Boom 500 and Crash 1000. They are less volatile. So from these statistics about reducing lot size, I want to explain something on Crash 300. And personally I've stopped giving signals on Crash 300 because I wanted to explain it on this video. Because Crash 300, it tends to give us the minimum lot size it gives us is 0.05, but from my analysis 0.01, it gives us a loss of 0.02. Let's say 0.01 equals loss of 0.2. So which means when it's now 0.05, the default lot of Crash 300, it means that we'll be multiplying 0.02 times 5, because it's 0.05, the minimum, if you don't reduce it to 0.01. So 0.05 is 0.2 times 5, and let's use the calculator. 0.05 multiplied by, no, it's 0.2. This is the lot size that we'll be losing at 1 minute, at a minute, when we are using 0.01. So say 0.2. So say 0.2 multiplied by, it's my calculator, let's say 0.2 multiplied by, let's say 0.2 multiplied by 5, 0.2. But the answer is, it's a $1. That's the answer here. That's equals to $1. When you say 0.2 times 5, the calculator is, let's say 0.2, and we say divided by 3, 0.2. This is 0.2 multiplied by 5. You can see it's $1. So that means that if you are using the default lot of 0.05 on Crash 300, you'll be losing $1 per minute here. So when it reaches our stop loss state, we'll be at minus $30. That's how volatile this Crash 300 is. So if you haven't watched the video, you can watch the video on how to reduce lot size to about 0.1 for Crash 300. And all this is based on a $100 trade account. All these lot sizes that I've shared with you from Crash 300 to Crash 1000. And then the next issue is about how I put my entries. Most people have been asking, how long do I put a re-entry or put entries in general until my stop loss is hit? So we will use this one. Let me clear this. Let me try to clear everything here. Let me open a new one. So let's say our first entry, it will be like here. Let's say it's a signal that comes as buy boom 1000, and here is the market price. Let's say we are buying here. Here is our entry, and we will put it as E, our entry position here. Let's say we have bought on 0.01 for crash 300. Let's say it's C3, and we have it's boom. Let's say boom 3, because this is on boom. Let's say we are buying boom 300, and this is our entry position here, and it has dragged us down here. Let's use black, and it has dragged us down, let's say for 10 candles. Let's say for here, let's say this is minus 10. This is minus 10 candles, and our stop loss will be here. Let's say I've calculated our stop loss, and stop loss 30 is here, and this is stop loss 30. So we'll be holding until we hit our stop loss somewhere here. So let's say my first entry will be here. Let me put purple. This is my first entry. That will be entry number 1. If it goes for 10 candles without spiking, that's minus 10. I'll put another entry here. That's entry number 2. And let's say the market, maybe it consolidates and still goes down to stop loss, not stop loss as such, but to minus 20 candles. Let's say here we are at minus 20 here. That's minus 20. I will put another position here. That will be position number 3. That will be position number 3. So basically, all in all, I put three entries. The first one is the entry position. Then the second one, if it goes for 10 minutes without spiking, I'll put another second entry. And if it goes another 10 minutes, that will be minus 20 now. That will be my last entry, this one. And if it, let's say it didn't hit stop loss and it consolidates and spikes, this will be what we call back to entry position. This is our main entry here. From here, our entry. This will be back to entry position, and we don't take profit here, but we take profit when it, let's say it goes down, and it's our first take profit will be at 20 at least. That's the least take profit we'll be taking. Let's say somewhere here, that will be plus 20. That's when we take our first take profit. Then the main take profit will be also at stop loss at take profit 30. That will be somewhere here. At 30 candles. Let's say plus 30. That's our main take profit. Why? Because we are risking stop loss 30 here down here. So you must get at least 30 on our take profit, but most of our signals here, they tend to go and do better than that, but at least our take profit should be at least 30, from 20 to 30. That's what we get to take our profit, our first take profits. And just in case our stop loss, let's say our stop loss is hit, we can exit and send another re-entry position. Let's say, for example, our stop loss was hit here. We can exit here, and if the trade or setup is still promising again, we can just do this. We can repeat this process once again. Our entry here, then our another entry. If it doesn't spike in 10 minutes, another entry if it doesn't spike in 20 minutes. But usually re-entries, they tend to give us mega spikes on our setups. So this next session, it's about it's about how I trade, like what the systems that I use. People have been asking systems that I use and the type of analysis. In my risk exposure, I told you that the maximum is 5% on one trade, and the type of entries that I'll be taking, that what I will be explaining, is just a brief overview of how I trade. So in the meantime, I can just plug this is 1000, and this is the boom spikes killer, one of the indicators I compiled. So it will be just running in the background while I explain my entries, how I trade. So basically, I have two systems that I use, and I'll be teaching both of them in the mentorship. And the mentorship is not like a professional mentorship or you'll be paying for mentorship. It's just me sharing the way that I trade to those who paid for lifetime signals. And the $250 is just for signals, those who want to join lifetime signals. Not that it's mentorship, my mentorship price or anything like that. I'll be sharing my analysis with these guys who are in the free, not the free group, in the main. This is just what I will be sharing with the people who are in the lifetimes, who subscribe for the lifetime signals. So I use two systems. First one is the BTMM, the beat the market maker. I use it in terms of its momentum. That's the main purpose that I use BTMM. And I use BTMM on reversals mostly, to find where I can get my reversals or rejection entries. And then the second system that I use is the one that I compiled myself, the Omega system. Most people in the group, they have them. And the Omega system is more focused on the trend continuation part of the trading. And the BTMM is focused more on the reversal. So I use BTMM for the reversal. And once the reversal is done and that there is trend continuation, then that's when I use the Omega system. In the BTMM, I found many people have been complaining that it doesn't work, but it has been pretty good to me. I don't want to lie. There are some formations like the M formation, the W, the V's, head and shoulders. They also use divergence as a confluence again in trading with BTMM. And EMA pullbacks, they really work good again on Boom&Crash, especially from 5 minutes, 5 and 15 for sniper entries. They work pretty good. In another entry that works is the shark fin. The shark fin also works. The shark fin entry, usually on reversals, like when you are scalping, if you can use the shark fin on M5 or M15, it also works. And then level retest, they also work, like level 1, and it comes and retest on level 1 for level 2, going down for crash. It also works. And the Omega system, as I said, is more of a trend continuation, and I've managed to develop it in such a way that it can tell you whether you are still in level 1 or you are now in level 2 in terms of the momentum. And then analysis, from my side, I use top-down analysis. And my top-down analysis starts from H4. When I open my chart, I just look for H4. If it's trending up or trending down, then I go back to H1, then M15 and M5 for entries. Then if I get the best, there are some signals that I see, that some setups that I can see that this is the best setup that I can take from M1. Those are sniper entries for me. And also my risk exposure, as I said many times, not more than 5%. And my entries, most of them, let's say 80% of them, they are based on that's a mixed five. They are based on pullbacks. I'm more of a pullback trader. So most of my pullbacks are valued from momentum value, momentum that is behind. I look for the momentum that is behind the setup, the momentum volume, or the momentum from crossovers. Like let's say crossover, then pull back to the EMA, then spikes are definitely going to come. That's why sometimes you hear me say a spike is going to happen in 10 minutes and it comes there and there. It's because of the momentum that is behind the signal. Just like some people, they are saying, yes, I can understand them if they say the M formation or the W that doesn't work, but they work. As for me, they work pretty good. It just depends on the momentum. There has to be enough momentum on the M formation for it to be a reversal, or for it to be a trend continuation. There has to be enough momentum. Not just looking for the M formation or the W, but there has to be momentum behind the formation of head and shoulders, or the W or the M formation. So the momentum is the most important aspect in these formations. That's what I have found again to be useful. And then there are 3 types of entries that I use. In most of them, I've done an audio to explain this, both on WhatsApp and on Telegram, that there is a rejection setup. In all these 3 setups, this type of setups, they are found on the 2 systems, the Omega and the BTMM, and they are also based on momentum. So momentum is the huge aspect behind these systems, signals, and setups. The first type of entry is the rejection entry. Usually I find this on BTMM, because BTMM is the one that I use for reversals, and rejection is more of a small reversal setup. That's a sniper entry that I can say, like on a signal, I can say just buy boom 1000 and close in profits, because it's just a zone, a rejection zone in the rejection setup that is aligned with each other, and they tend to give spikes on the rejection entry. And then there is natural momentum, and this is the big spike setup, also known as the mega spikes entry. The one that I label mega spikes is based on natural momentum, and natural momentum is pretty good momentum that I can rely on for mega spikes, and it's a setup that is about, I think, 80% accurate, because there is no two ways about it. Most of the time it tends to spike big. And then also on the natural momentum, it's trend continuation based, and rejection is more of a small reversal, and natural momentum is trend continuation mostly. So it is based around the area that I told you about, pullbacks in the support zone for boom. Then the last one, the last type, because we have rejection in natural momentum, then artificial momentum is momentum that is usually, I get it from BTMM. It's more of a pure reversal setup, and I will explain deep in this for the mentorship program. So let's say I think 80%, more than 80% of my strategies that I develop or share with you, of indicators, they are based on momentum. And usually the entries, because the entry point is the most important aspect, they are more aligned in pullbacks. Let's say from like pullback to a support and resistance, support or resistance area, or a pivot point, a pullback to a pivot point, and then another pullback. It can come to a previous swing point, and this is much more common in many entries, but it has to behave enough momentum for it to perform well. So I will look for the momentum first before I look for the pullback, because if we have the best momentum, which means when we get to complete the pullback, we have the best entry setup. And then another entry is usually a pullback to a last market leg, or a pullback to a last divergence leg, also based on momentum. The more momentum you have on the divergence, on the previous divergence leg, the more momentum it has to spike. And also momentum is another part behind market imbalance. If we check, I think I sent the boom 500 signal yesterday, and I said that watch and learn, and it was market imbalance, and I told you that there is market imbalance on boom 500, and it did spike, big mega spikes, because of market imbalance. Because when there is market imbalance, it usually means that the let's say for spikes, with spikes, the spikes in the volume of the momentum that is being provided, they are not aligning at all. They're like diverging in some kind of way. So which means that when the market finds an escape, let's say an escape point, let's say for a pullback or a divergence, it tends to spike bigger That's what I mean by market imbalance. The momentum will be big momentum that is being provided, but the spike or the market movement is not at all aligning with the market momentum that is being provided. So the most let me compare like the most important tips you can take from this video is risk management. As I said here, this is how much of the lot size that I use when I have a small account. That's 120, and also try to accept losses, because when your stop loss is hit, we look for another entry. But if you tend to hold to, let's say, minus 60 candles, that's twice our stop loss, and then closing that loss, it will be emotionally challenging. So let's try to accept losses. If the stop loss is hit, we can close the trade and we look for another setup, because it doesn't get us nowhere to take profit when it gets to 30 candles, but you are holding losses for about an hour. That's about 60 candles, and it will be very damaging to the account. And also you can find, I think BTMM is nowadays like all over the place. You can check on YouTube, it's there if you want to learn BTMM, but make sure you try and understand the concept of momentum, because momentum, I think from my own point of view, is what drives the market. So if you have a pullback with enough momentum, it's a good entry. A pullback, not a pullback, as such a divergence with enough momentum again, it's another good entry. And some formations like V's, W, M, head and shoulders, they also work with enough momentum behind them. If they don't have enough momentum, it will not be a good entry and it will not be a good trade again. So guys, let's apply proper risk and risk what we can afford to lose, because some days it will be like very hard trading after a loss, but you need to come back the next day to try again and trade again. And don't force setups. If the stop loss is hit, there's nothing we can do about it. We can just close. In most of the time it will be usually manipulation, but you'll get a re-entry on that position or that same index and you profit again from it. So those want to check, you can check here what I was saying on Crash 300. You can put, let's say you can do it on Boom 500 and Crash 1000. You can put the same lots and scalp them, and you can see that they move exactly in the same way. So I think I have said enough for this video. This was just some random video that I had to clear some things up and share how I take my entries and how I trade, because you must apply proper risk. Try to apply proper risk to every single position you take. As for me, I don't I don't exceed more than 5%. I don't take a trade that takes my account equity more than 5%. I can either close it then take another re-entry, or just close and leave the index alone. If it's boom 1000, then just leave boom 1000 and not trade it for the rest of the day. And also another point, if you don't have enough equity, let's say this is 120 is like the smallest account that I can trade. That's why I don't do account management, because someone can come with a $50 account. I don't like over leveraging people's accounts, not even my own. I can't. So 120 is the minimum that I trade for myself, so that I can apply proper risk. So let's say if you don't have enough equity, you can just invest yourself in learning. It's not a crime, or not trading and getting money is not, it's not that bad. The thing that you can do at first is just to learn. You must learn, because some people they don't know how to make even a deposit, and they don't know about currencies or trading indices, and they don't even have MT5, but they just want to start trading a live account. So please try by all means to apply proper risk and invest in knowledge. If you can, try as hard as you can to learn on momentum, because momentum is very crucial to me. Any entry that I take is based on momentum. It can now be a pattern, maybe a triangle, ascending triangle, or a double top or double bottom. If it has enough momentum with it, or that comes with the double top, is the best entry that you can get. But if it doesn't have any momentum, or the momentum is not yet clear, it's more risky to trade that setup. So I think that's all that I have for you. And mentorship, it will start, I think, Monday. Yeah, I think Monday. And I said it's not much of a big deal of momentum, of mentorship, I mean. It's just how I share my entries, how I enter my entries on BTMM, what conditions do I follow, what setups, and the types of momentum. I said 3, and the type of entries, the type of pullbacks. From M1 analysis and entries to M15, that's the most that I can trade. M30 and H1 is just for my top-down analysis, as I said. From H4 down to M1, that's my top-down analysis. In my entries, I take them from M1 sniper entries, M5 mega spikes, M15. These are usually rejection, but they tend to be more of pure reversal when I'm using BTMM. And when I'm using my Omega system, it's more of a trend continuation to the upside if you're trading for boom and crash. Yeah, but mostly boom. So I think I'm done. And this is just the boom spikes killer. It's been doing pretty well for boom. It's limited for only boom 300, boom 500, and boom 1000. And it's on M5. That's the best that I've seen it perform at. M5 entries, same stop loss 30. And it's been doing wonders in the world of boom and crash. So this is me signing out. This video has been pretty long, 45 minutes. So just manage your risk, guys. Learn to manage risk, learn to cut losses, learn about momentum as much as you can. You can try out a BTMM from responsible mentors. I can refer you to some that I know that are pretty admire in the business of trading currencies and indices. But this one for me is just more of a, this mentorship is more of a free gesture to those who subscribed for the lifetime signals, because lifetime is a long time. Lifetime is a long time, guys. So you must at least learn something from me, from the way that I trade, because lifetime is a pretty long time. Not knowing, yes, you can get lifetime signals, but you have to have the knowledge of what is really behind the signals that are being given. Because, as I said, I think I will try to build a trading community with my lifetime subscribers so that they know every entry that I take or every entry that I miss. They know what is really behind that signal. Let's say if I say buy boom 1000, the person should just go back to their charts and do the top-down analysis as I have told them, and they can tell that this entry was taken on the M5 chart because this and that conditions have been met. That's what I'm trying to build, because yeah, lifetime, as I said, it's a pretty long time. So you should at least benefit something, learn something as we get the signals for lifetime, and you can know why these signals were sent, what was the analysis behind, and also what was the momentum behind this entry from different entry points and time frames. So I think I'm now finally done. Thank you for supporting UncleDeriv's Productions, and also thank you for the feedback. People have been sending the entry, like I said, the results, the screenshots. So we've been sending on Telegram. Thank you. And also to prove that this BTMM works, those information there, I think you can check. I sent the message on 20, I think between 20 and 24 May about Bitcoin, that Bitcoin is going to crash to at least 20,000, at least. That's the least that it could do. And now I checked it yesterday, it was playing around 20,000, the market price for one Bitcoin. So invest in knowledge, guys. Bitcoin, I said it will crash to 20,000 at least, which means it is another possibility to go down, but it's due to analysis. If you have analysis, the momentum was there for the crash to happen, and it did happen. So invest in knowledge, guys. The market is a good place to be if you know what you are doing, if you know how to trade with the momentum, trade with the flow, or as they say, follow the trend. So you can check the Bitcoin message that I sent for people to check. I just sent them because I'm not really officially, is the word that I want to use. I'm not officially now trading currencies or stocks, but the cryptocurrency analysis that I did on Bitcoin, it did pretty good. You can see Bitcoin fell from 29 to 20. So let's try to learn, guys. That's the most important thing that I can say to you. Learn momentum, and after you get enough momentum, that way you can get these good entries, pullback, sniper entries, natural momentum, artificial momentum. You can trade even rejection. Because let's say if you can analyze a rejection on D1 on 1 day analysis, it will be a sniper entry that can last maybe for about a week or so. So it depends on the time frame again. But as long as the momentum is there, parachute out trade family, the trade will always go as expected with enough momentum behind. So invest in learning, learn to cut your losses, as I said before. So thank you for sticking around.